Good morning, learners. Welcome to my YouTube channel, Siksha Sarvopari. Today we will be learning about accounts. So, we will be learning about what is account, what are the types of account, and we will be seeing one of the practicals where we can find out what will be the types of accounts and how we use it in our accounting language. So, let's get started with the video. Before starting the video, if you have not subscribed to my channel, please subscribe to my channel and hit the bell icon for getting the latest notifications of the video. So let's get started. So first, what is account? So it's simply an account is defined as a systematic and summarized record of the business transactions pertaining to one person, one property, or one head of expense, loss or gain. So you have to concentrate on these things. One person, okay, one property or one head of expense, loss or gain. So accounts basically means what? It is a systematic record of all the transactions which are happening into a particular period, let's say 1 year. So in 1 year, whatever the things has happened into that account, we will be considering that thing as an account. I'll be giving you the example. If let's say there is an account of cash account is, so in the particular year, in whatever year it is there, we will be having numerous of cash transactions, incoming transaction or outgoing transactions of cash. So in that transaction related to cash, whatever the things are happening, it is cash account. What we are saying, cash account is there. So that is all the related expenses or thing are there, that is accounts. Okay, number two is that there will be separate account for every item. So in the accounting, whatever we are having, expenses or anything, income, we purchase capital or whatever things are there will be separate account for every item. For let's say we are paying salary to some person, so there will be salary account. If we are paying rent, so there will be rent account. If we have purchased machinery, so machinery account. So these all are types of accounts which will be there. Okay, now an account is given a suitable heading. Now I have prepared this as an example for understanding of yourself. So this is like the account which is seen. So if let's say here will be machinery account, so machinery account will be written as, there will be two sides of machinery account, one debit side and one credit side. In all the transaction, all the accounts, there are always two sides of it. One is debit side, which we also call it as left hand side, and another is credit side, which we also call it as right hand side. So two sides of accounts are always there. Now we will be heading towards what are the types of accounts. Okay, so let's get started. So classification or types of accounts. So basically accounts are of three types. Okay, here I'm not talking about the bank account, it is related to accounting, bookkeeping and all. Okay, so accounts is, first one is personal account. So in personal account, what we see, first I will be talking about golden rules of accounting, and then I'll be letting you know about what are the examples, and then you will be able to understand what are personal account, real account and nominal account. So basically accounts are of three types: personal account, real account and nominal account. Now with the name also you can understand personal means related to person, related to property. Okay, that all accounts comes under personal account. So personal account, in personal account, debit, whatever will be debit, it will be called as the receiver, and whatever will be credit, it will be called as the giver. Okay, then next we will be heading towards real account. So in real account is related to accounts like we can say, I have written here, real account is related with assets account, liabilities account, or whatever accounts are there, it is real account. So real account, in real account, what comes in, debit what comes in, and credit what goes out. So it will be like when we will be purchasing something, so that thing will be coming in our industry, or we can say business. So if we purchase machinery, so machinery will be coming up, so machinery will be debited, and then cash will be going out, or bank will be debited our bank account. So that thing we call is a credit. So debit means whatever comes in, and credit means whatever goes out in real account. You have to concentrate on this, because these three only summarizes the all the accounting thing. If you will not understand this thing, then your accounting knowledge will be nil. Okay, so you have to concentrate. Nominal account. Now nominal account says what? Debit all expenses and losses, credit all incomes and gains. So nominal account says that whatever the debit, it will be all expenses and losses which are happening into the business, and credit will be all incomes and gains which will be coming into the business. So expenses will be, I have given you here the example, nominal account, expense account, income account, etc. For example, if we are paying the rent, so rent account is nominal account because it is expense, our expense, business expense. Salary will be also our expense only, so it will be also going into the nominal account. Interest will also be interest. Sometimes we get, sometimes we have to pay. So according to that, it can be expense also, it can be income or gain also. Okay. Personal account, I have given you the example like person's account. Let's say if somebody has started business, let's say Ram has started the business, so Ram's account is personal account. So it is written in its name only, personal, related to person. That is the basic thing. So I hope you have understand this types of account. It is the golden rule of accounting. Whatever, when somebody asks what is the golden rule of accounting, you just have to say that personal account, real account, and nominal account are the types of account. And in personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. Moving forward, now I'll be giving you some of the example with which you can easily understand what are the personal account, what will be real account, and what will be nominal account. So please listen carefully and see to it. So personal account. A personal account, we have seen that debit the receiver, credit the giver. So example is that sold goods to Anilesh for rupees 10,000. Now you have to see person. Now person is whom? Anilesh. Okay. So Anilesh is the person. Now what we have done, we have to think upon our point of view. Okay. So from business point of view of ours, what we have done, we have sold goods to Anilesh for 10,000 rupees. Now we have sold this on credit, not in cash. Okay. Now this is written what? Debit the receiver. So here the receiver is whom? Anilesh. Okay. Anilesh is the person who have received the goods. So Anilesh account will be debited. So Anilesh account we have debited. Now what we have done? Goods are going from our business. Okay. We have sold the goods. Now this is a combination of personal account and real account. In real account, credit is what? What goes out. Okay. Credit what goes out. So what we are going out from our business, it is goods. So goods account will be credited. So this is a combination. So whenever you are making the journal entry, it will be a combination of all these three accounts. Sometimes personal and real, sometimes real and nominal, sometimes personal nominal, whatever the combination it may be. But it will be combinations of these accounts only. So here, sold goods to Anilesh for 10,000. So debit the receiver, credit the giver. So here Anilesh is receiving the goods, so his account will be debited. So Anilesh account debit to sales account. Sales. Now second, real account. Now what in real account we can see, it's what we have seen, debit what comes in and credit what goes account. Real account is related to assets accounts, liabilities accounts. These all are real account. So we are taking an example of purchase goods for cash. You can say 10,000 rupees. Okay. So here purchase account will be debited because we have goods purchased. No, here not specification what goods are there. So we'll generally write purchase account only. No, so purchase goods. So goods will be coming into the business. So we will be writing purchase account for that. And cash is going out of the business. So we will be writing out cash. So here we can see that debit what comes in. So goods are coming in. So we generally we write purchase account instead of goods account. So purchase account debit to goods what goes out. So cash is going out from our business. So it will be cash account. I hope you can understand. Now after that, last one is nominal account. Now in nominal account we have seen nominal account debit all expenses and losses, credit all incomes and gains. Okay. So third example we can take it, paid salary to manager of rupees 30,000. Okay, so we have paid the salary of 30,000. So what is the expense here? Expense is salary. Salary can be taken as an expense of our business. So salary account will be debited because we have written all expenses are and losses are debited. So salary account debit to now what is going out of our business? Cash or bank, because we will be paying cash or bank to the manager. So here the comes is credit what goes out. So credit what goes out. So Cash Bank is going out of the business, so it will be 30,000 rupees. We write generally the amount here. Okay, here you can give it as dot, and here you can write the amount. So here will be salary account 30,000 to cash or bank account 30,000. Okay, so I hope you have understood all of the things which I have explained today. I hope you will like the video. If you have liked the video, please give the like button a thumbs up, and subscribe to our YouTube channel Shiksha Sarvopari, and we will be seeing new concepts and videos in the upcoming videos, new concepts. Okay, thank you.